Good weekend. Ira Epstein with your weekend edition of your financial market wrap-up. And this wrap-up is for Friday, the last trading day of April. Say goodbye. End of the month, end of a week, end of April, 28th, 2023. All right. Look at the stock market. The market doesn't care. The naysayers are taking control. They are of the opinion it's one and done. And more keep coming out saying by the last quarter of the year, the Fed will have no choice but to turn back the tide. It sounds like a song. Turn back the tide, and they will be dropping interest rates. And of course, the other people are going, no, that's really not probably what's going on. A lot of traders warning on the S&P, the 4,200 levels, a very rich level. So you got your battle. For the moment, the naysayers are winning. And frankly, they have been winning a lot. They keep buying the breaks. They keep looking for the market to come up, and they have cushioned the market. We're going to get this coming week, though, right in front of the Fed, some ADP numbers, some jobs numbers. They'll get a peek as to what that jobs data looks like to make a decision that, there's the crack we're looking for. No, it is still not showing up. We've still got people working like mad. The service sector is strong as can be, and it is just not time to do what the naysayers are saying. Bonds and notes rallied with that. As I told you, I wanted you to be looking in the gasoline. Just pay attention to the 18-week moving average of closes, and you'll see it here in a moment. Dollar up a bit, a mixed bag in the currency market. In the Japanese yen, Mr. Yuta came out, Mr. Yuta came out, and he did nothing. But he did say no more forward guidance. So they're paying attention to the bands that they've set. They can adjust them. They can step in with whatever they want. But the market said, it's more of the same. And he said they have to do a study to see the impact of all this. So how long can a study take? And the word was up to a year and a half. Does that mean more of this for a year and a half? And the market came down in the end very, very hard. Let's take a look at a monthly chart and get a feel for what we've got. Here is the 18-month moving average of closes. On a monthly chart, that's your resistance point. You're over by approximately 40 handles, so you've got the bias of the chart up. The market is held nicely over the 18-week average of closes on a close-only chart. When we come over here, we can see that we're back up into all this resistance that we've been fighting at literally since last August. This is when the peak was made. Then we came back, and here at the end of the year, we were fighting in the area that we're at right now. The pattern on the chart, you have a lower low and a higher high. That is not an uptrend. The market is now fighting a battle at an important 100-week average of closes. If you'll go back with me 2.5 months, you were fighting the battle at the 18-week average. As I said, the market has had the naysayers come in at each main moving average, and they've been able to drive the market to the next one. Don't just wave these guys off. That's what they've been doing, but they're now got their hands full. The 42.47 level, the upper Bollinger Band to the 100-week average, is an important resistance level. We'll see what they can do with it. We'll see what the Fed says. If the Fed's super dovish, away you go into that zone, and then you'll fight your battle. If they're hawkish, you're coming back down there, maybe for the 18-week average of closes. You are overbought in the slow stochastics, not embedded. So I have a market that's approaching key resistance area, not trending, bias up. In the Dow, same thing. No, you're overbought. You have cleared the 100 and the 18 average. They've been playing back and forth with each other. In fact, you might even get a bullish crossover. It tried once to do it here, couldn't do it, fell back, and it could come up here. I'd say the next 3 weeks are going to tell us if you're going to get that or not. If the market continues up, the Bollinger Band at 34,833 is the resistance. The same type of pattern, unfortunately, a lower low and a higher high, and overbought. Don't see anything there. In the NASDAQ, I see a lot of resistance up here at 13,466 to 13,766, the upper Bollinger Band in that. The difference is you have an embedded reading. So the tech sector's got the power. This is the market that on the breaks is getting bought. I don't think the others are. And the bailing comes if the red line closes under 79 on a Friday. We'll see if that happens. I don't see it right now. And the weakest of the indices can't even get over the 18-week average, and it's in a downtrend with the downside bias is the Russell, but it is in oversold territory. I define anything oversold as under a 25 reading. So who won the week? Most certainly who won the week is are the naysayers. Now, I do understand that First Republic Bank went into FDIC receivership today. With that, the stock fell another 50%. It could be going to zero at this point. We'll see if the banks that gave it that $30 billion get their money back. I would assume shareholders are going to get wiped out on this deal, but we'll see. In the 30-year bond, we have a higher high and a lower low. I'm looking to see the market fight its battle here at that 18-week average, but this is in the middle of no man's land. I have no idea what to do with that. In the 10-year notes, you have the trend down, the bias up since you're over the 18-week average, and momentum just going flat here, knocking on the door, if you will, of being overbought, but not there. Well, it is actually. It's got a 71 reading, so it is overbought. So overbought, resistance the upper Bollinger Band, any settlement under 113.30.5, a settlement on a weekly basis, would be bearish, opening the door up for another challenge of that band. In the dollar index, the market has been coming down to the support of the lower Bollinger Bands in a downtrend that is oversold, and big support waits for the market at 100.48 down to the 100.30 area. Not far away from here, about 100 points. In the euro, you're in resistance. You keep hitting the upper Bollinger Band. You're finding support at the 100-week average. I hate when traders go to that 100-week average and try to reach for it to buy it. You generally don't come out of that in great shape. In the Canadian dollar, as you can see, back and forth action here, just whipping either side of that 18-week average. The Japanese yen, as I said, down and down hard. Look at the lower Bollinger Band. You're now narrowing in on that. I look for the market to have problems right there. In Bitcoin, the lower lows met with higher what then? Higher lows, higher highs, still bullish. Market's still targeting a higher level up there. No sign here this market is given up to the upside. Brent versus WTI oil continues to contract, if you will. However, you've reached a point in this where the market's more or less trading between the upper and lower Bollinger Band, not quite hitting the upper bands, but certainly coming down to the lower ones, and the market's not acting like a market that wants to fall apart. Interestingly, today the Kremlin announces that they're not going to give you any more oil production figures, oil export, gas export, or any of that until April of 2024. So they're taking everything off. As I've said, they're lying. They are producing more. They have worked out a deal with OPEC where they're carving up the world, and the Asian countries that will buy from Russia, they are buying. They're not going to tell you how much. They're not going to give you production numbers or anything. And the rest of OPEC gets the rest of the world, and that keeps Russia going, and it keeps, for the moment, peace, and they hope high prices at OPEC, all at our expense. When you come into the Rebob gas, do you notice right here how that 18-week average is holding? That's what I told you. You've got to pay close attention to it. I think that's a number to pay real good attention to. Now, this is the week you're going to want to see what I do in my morning futures videos. Come Wednesday morning and Thursday especially, you're going to want to know what's going on. What do I think of the markets? Where are we headed because of what the Fed does or doesn't do? I'll cover 40 charts. We'll cover them on daily and weekly basis. Everything you can see there, just like Star Wars, as you can see, with all the different graphics that make this up. Trade ideas galore. See what's going to happen. And the nice news is I can tell you going home, the positions I have my clients in futures are zero at this point in time. So I'm waiting to put on and slam on a bunch of new positions. How do you get this? Well, if you're watching me here on YouTube, you see a join button in blue. Give that a click. That's one way. You can go to our website, and under the word research, It'll be there, or you can click up here at any point. You'll see an icon come up. That'll have research in the old-fashioned way. You can always call us. I'm Ira. You have yourselves a great weekend. I'll catch up with everybody Monday morning. Take care.